It's April. How did that happen? The real estate market has changed quicker than all the experts said. April last year, Easter weekend was the top of our market. What are we seeing now? What are the naysayers saying? And what are the experts saying as we move forward into this spring market that is a little bit different than they thought? So stay tuned and we'll dive in. What's up, guys? Jeremy Kane with eXp Realty, bringing you the April Denver and the Suburbs real estate market update. This is absolutely a polarizing kind of topic because some agents are crushing it and some agents are really struggling to get their business and get traction in their business. So we're going to talk about that, what the market's doing and everything. So let's dive in here. First and foremost, the financial world is kind of all over the place. You know, as we had 6 banks crash, so to speak, in the month of March, which really kind of left a sour taste in everyone's mouth. It also allowed the Fed to only raise the short-term interest rate 25 basis points versus the previously planned 50. We're still fighting inflation. It still changes every single day. So that's something to keep an eye on, and always remember that that Fed interest rate is not directly correlated to the long-term interest rate, the 30-year fixed mortgage rate, which a lot of people kind of get confused sometimes. So that's that. Market conditions are kind of up in the air. Literally, the markets celebrate when Powell makes certain statements, says the banking world is going to be okay, and that maybe we're not going to continue to raise the rate as fast. The markets celebrate. Income's up, savings are up. So those market celebrations led to some positive changes in the long-term interest rate. But for now, it's really just based on the tip of Powell's tongue on what the Fed's doing. So let's kind of allow that to sort itself out, as we don't know how it's going to be. We've said that the Fed was going to quit raising rates. Now they're raising them. Now they need to raise them more. The bottom line is their target number of 2% on that inflation is going to be pretty difficult. So just stay tuned on that. But let's talk about homes. The market activity is picking up despite what everyone said, a slow quarter one, a slow quarter two. At the end of quarter one, things started picking up in our market. And the honest truth is, it's probably a lot to do with seasonality, but it also goes to show you that the predictions and waiting because the interest rates are going to be down in fall of 2023 or all of that is probably not the best strategy. It's better to look introspective. What's your life look like? Are we at the step to make an investment into a home and start building wealth, or do we need to wait a little bit? It shouldn't have anything to do with the market, to be honest, unless you're actively in the market and just not being able to meet the mark. So that's when the market should kind of play a role in your decision making, not whether to get in or not get in. If the time's right for you, get in. Showings are up. I had a nice listing over in Harkness Heights, over in Denver, and we had 20 showings. We did only have one offer. It was staged right. It's a desirable neighborhood, had a 2-car garage. Floor plan was a little bit different. A lot of the feedback on that was that the floor plan, didn't work for the buyers, and the basement ceiling was a little bit low. But regardless, we got our offer. We got close to list price, and we're under contract, and it only takes one. I've also heard that some people had like 9 showings and had 4 offers. So it just really depends. That price point is super key. And, the weekends and, what people are doing as we move to spring, the weather gets nicer. People are, out doing stuff. It makes open house activity kind of pop, but also showings kind of on the super nice first weekends, showings are a little bit down. We also have a lot of holidays on the weekends and events coming into May. As you know, my least favorite month to sell real estate. But again, doesn't matter. You have, graduation, Cinco de Mayo, Mother's Day, which is like second to only Christmas, I think, in lack of showings, Memorial Day, and then college and high school graduation sprinkled throughout. So as we the weather's heating up, especially in Denver, people like hanging out in the park and not necessarily looking for homes. Maybe they'll push it back a little bit until the kids are out of school or whatever. But as we kind of jump into that spring market, when everyone seems to think it's selling season, the truth is in Denver, we kind of have the pre-spring selling season, January, February, March, which is my personal favorite. And then like after kids are out of school, June, July, getting in a home before August is kind of our 2 kind of market pops each year and where it levels out. So understand that that's what's coming. Multiple offers are there, but what are the offers looking like? In my estimation, obviously I only had one offer on that house. I've been a part of some other multiple offers on the buy side. It's a lot easier to win a bidding war, so to speak. Terms are coming back. You're not having the sellers just pick from terms. You're not having sellers just name every term they want, no appraisal, no inspection, post-closing occupancy until they find a home, all that stuff. So things are tightening up a little bit there, but your flexibility as a buyer will sometimes supersede your ability to pay $5,000 extra or, bridge that appraisal gap. So some of the non-financial pieces are definitely coming into those contracts. So that's super important. And some homes are still sitting. We did have an increase in inventory, which we'll talk about in a second, but the homes that have been on are kind of sitting and rotating. It's really odd because I've had a home on for quite a while, just a really weird floor plan, a beautiful lot, huge garage at an elevated price point. But we're still getting showings on that property based on, the features that it does have. However, the offers are, few and far between. And so it's just kind of dependent on the house, what people are looking for in that price point. I think everybody, the price points are very different and dynamic here. So that brings me to the next point when we're talking about rates and all of that and affordability. That's where, the price points are seeing a much different activity rate and offer rate and above asking and all of those things. Next, we're going to talk about the rates and seller concessions. What's going on with that? The honest truth is, with the buyer activity we've seen, showings are up. Buyers have accepted that higher interest rate. The one thing that's a little bit of an anomaly to me is now that we're seeing the offers and we're seeing the activity pick up, we're not quite seeing the $20,000 seller concession. And people will say, well, why is that? We still have the high interest rate and buyers are used to it. Well, the truth is now that we've seen that little bit of dip, 4 or 5% maybe in some of the hardest hit areas when the market came down from Easter weekend last year, maybe 5% down in pricing or whatever that might be. What the deal is here is that we're scared of appraisals. Back in the day when we were bidding over and whatever or when we were coming down a little bit, all the comparables, the sold properties, which is what the appraiser uses to determine the market value, it was easy to do that because you had all these comparables that were higher and you could adjust down a little bit, but they were still appraising. Now we have some of these rate buy downs, $20,000, $30,000 in concessions. That's a little extreme. But if you're trying to get that temporary rate buy down or the permanent rate buy down, which is a little bit cheaper sometimes depending on your lender, so make sure you're talking about that, the home still has to appraise, so if you're in a bidding war and you say, okay, well, we're going to bid $20,000 over and do a $20,000 concession. The seller's really worried about the net because they don't care how the money's used. But ultimately, if you go $20,000 over ask for a $20,000 concession, that home still has to appraise because the loan is actually on the $20,000 higher number. And so that's why we're not seeing that quite as much. Some buyers are having to do the temporary buy down, which is not my favorite because literally it's just giving somebody money to hold to pay out every single month out of an escrow account. Probably be better served to hold on to that money, although that monthly payment is super, pretty and whatever. It's literally a dollar for dollar. It's not changing anything you're paying. That money that is, buying down the rate, your mortgage rate payment is still going to be, the same as it comes to the lender. You just pay the lower rate amount and then the escrow pays the difference. So be careful with those buy downs. Obviously, those are something that people are a little bit scared of because now that the market has dipped and the comps, might be a little bit less than we're selling for because the market has increased again, that's when things kind of go awry. So understand that and understand that we're not necessarily in that space to buy down all those rates and do all those things because of those appraisals and because of what the market has done over the last few months. Next thing I'm going to talk about is just be prepared for the drama. As I mentioned earlier, Easter weekend was the very top of our market, the very highest our market has ever been, the highest, weekend. And from there, we kind of started to level off and obviously fall off late fall, winter of 2022, 40% appreciation over 2.5 years, 5% drop. we're still way ahead of what the average appreciation is. So, but with that said, the year-over-year numbers are going to come out, whether it's this weekend or at the end of this month, and it's going to be a massive difference, right? Inventory is going to be, up a little bit because we were at record lows then. We're going to see home prices down, averages and means. You can talk all day about those statistical measures, but understand that those year-over-year numbers are going to be down, and just keep in mind that was the absolute tippy top peak of our market last year. So the news channels and all of those things are going to latch onto that. They're going to put those scary headlines out there that make you think that the housing market's down 15% and all of this. It's not the case. And when you pull that back, we can talk about year-over-year stats all day, and I understand that they're important and they kind of tell a story, but the truth is your home and the equity you have in it is not realized until you put your home on the market. So it's not like you lost that money. It's not like that money was in your bank account and they took it. It was a general idea of your equity position. And so just know that those year-over-year stats are going to come out and they're going to be scary. Next, we could focus on the month-over-month. Let's talk about the month-over-month just this year, right? Pending sales up 22%, closed sales up 32% just from last month, new listings up 43%. These are seasonal spring numbers as we came off of that, scary time, as we started seeing the interest rates dip a little bit, and, obviously they've been volatile. People in January and February were getting into homes, closing in March, and that's why these month-over-month numbers are up. And so, yeah, you can say, year-over-year we're in trouble, blah, blah, blah. But if you look at month-over-month, we're actually doing really well and kind of on a normal seasonal trajectory, which is actually where we want to be in the real estate market. The one thing we would like to see is an influx of inventory to kind of give us a little more balance, but we'll see how that goes. So let's talk about this. We can talk about the stats. We can talk about year over year. We can talk about month over month. We can talk about interest rates, but what's it look like boots on the ground? Inventory is still extremely low. Okay. You got to understand that 99% of mortgages are locked below 6%. And that's of the people that have mortgages. There's usually about 30 to 35% of people that don't even have mortgages in our market and own their homes outright. So if you're thinking about that, 2/3 of the homes that have 2/3 of all homes have a mortgage on them, 99% are below 6%. And right now our rates are sitting a little bit higher than that, depending on your situation and those buy downs. So that's something you have to understand, is that if you don't have to move, you're not going to move, right? Because that upsize, moving up and, finding the forever home or the dream home is going to cost a lot more, right? It's not just the $1,000 difference in your mortgage anymore, because you're locked in at that really low interest rate, and you're kind of, going from a 3% interest rate to a 4% interest rate or whatever. We're seeing huge increases. So that's going to be, a $2,000 increase in your mortgage, which is a big deal, right? I don't care who you are. And so understand that piece, but also understand if you're downsizing or you're looking to, get a smaller house or make a move that's either downsize or equal. Now your mortgage, you do have the equity, and that's great, and that's going to help you, but the mortgage is based on that interest rate, right? And so now, most houses locked below 4%, 72% of houses is a 2% increase in your mortgage rate. That's a big effect on your mortgage, and it's not about the dollar amount. It's just about the mortgage straight across the board. The higher your mortgage, the higher that interest is going to be. So that's kind of what we're seeing. That's why we're not seeing a bunch of people flood into the market as far as put their homes on the market and just make a move, maybe move across town, whatever. They're staying in place because there's other ways to get money and improve, maybe add a bedroom or, pop a top or add a garage or all those things that you can do. But that's something to really understand, is that's why we're not seeing the traditional even amount of inventory coming to the market, because now people are like, well, I got it. I'm locked in at this rate. I'm never letting it go. If they do have to move, the first question that we're going to ask is like, well, do you want to keep it as a rental because you can cash flow, because that interest rate is so low? That's the problem, and inventory is going to remain a problem. And we're not at a point where, the agents that are savvy, really getting their clients ready, prepared, prepared and going in and, you know, with the boxing gloves on and winning those things, that's where, you know, that real estate agent hiring the right person that's going to go to bat for you and get you into a home is of utmost importance, because with the inventory suppressed, showings up, seasonality coming to the market, we have, you know, obviously the high population of millennials and first-time home buyers. You got to have somebody that can help you win those quote unquote bidding wars, but it takes a savvy agent right now, because it's not just like, you know, pick your highest price and throw it out there. What can you do? What can't you do? It's like, how can we get you into the home for as little amount over asking as possible with terms that make sense for you? What terms can you use as a buyer to get you to the promised land there? So those savvy agents that understand the market, have those relationships, are absolutely succeeding. I was talking to Nicole Ruth, the #1 lender in Colorado, the other day, and she said the agents that are crushing it are absolutely crushing it, super busy, never been busier. The agents that are not, there's no real in between. Either your business is, you know, going crazy or your business is stagnant. And so that's a super important piece. And, you know, just to say, if you're going to hire a real estate agent, you got to have somebody who knows the market, knows what's going on, has their finger on the pulse, because if you have somebody who's stagnant and who hasn't been in it, yeah, they might have time, but they also don't have the understanding of, you know, what's a multiple offer situation. You don't want to pay over in this situation. You have a little bit of power as a buyer and you want to hold on to that. So that's what we got for this month. I am, you know, very, you know, it's going to be okay. The real estate market's going to be okay. We're going to continue to sell homes. We're going to continue to move. It's really about a lifestyle and finding the winners in every market, which is my expertise. I love talking to first-time homebuyers. I love serving first-time homebuyers because it's like solving a puzzle. Okay, let's make a plan, let's execute, and let's celebrate at the end of the day. So I hope you guys have a wonderful start to your spring. Hopefully the weather warms up, definitely here in Denver in the suburbs. As always, please like, comment, subscribe. If you have any questions, please comment below. If you have anything to say and you're hearing something different about the market, shoot me a comment. You can always reach out on Facebook at JKCO Realtor is my business page, or my personal page, Jeremy Kane. Would love to talk to you and see what we can do to help you understand this market and take advantage, because there is still deals happening and things are still moving. So homeownership is my goal for each and every one of you guys that are watching this. So I hope you enjoyed and have a great day. Bye-bye.